If you live or do business in New York, you know that tax season can feel overwhelming. With so many deadlines and forms, it's easy to let things slip through the cracks. But missing your tax filing deadline is more than just a headache. It can lead to serious financial consequences, including penalties, interest, and even enforcement actions from New York State. So, how can you avoid penalties for late tax filings in New York? Let's break it down step by step so you can stay compliant and keep your finances on track. First, let's talk about why filing on time is so important. New York imposes some of the strictest late filing penalties in the country, and they add up fast. For personal income taxes, you'll face a penalty of 5% of the unpaid tax amount for every month your return is late, up to a maximum of 25%. On top of that, interest is charged at a variable rate that can change every quarter. For businesses, the stakes are even higher. Late business tax filings come with a minimum penalty of $100. And if you miss payroll or sales tax deadlines, you could be looking at even steeper fines, like a 10% penalty for the first month you're late on sales tax, plus 1% for each additional month up to 30%. That's not even counting the interest that keeps piling up until your tax bill is paid. So, what causes people and businesses to file late in the first place? Most of the time, it comes down to a few common mistakes. Maybe you're struggling to keep your financial records organized, or you've misplaced receipts and invoices. Sometimes people underestimate how soon taxes are due, or they assume that filing an extension means they can pay later without penalty. Not true. An extension only gives you more time to file, not more time to pay. Cash flow is another big issue, especially for small businesses and self-employed individuals who might not have enough set aside when tax season rolls around. And if you earn income in more than one state, things can get complicated fast. Many people miss New York deadlines because they're not sure where or when to file. But here's the good news. With a little planning and the right tools, you can avoid these pitfalls and stay ahead of your tax obligations. Start by marking all your important tax deadlines on your calendar. For individuals, the big date is usually April 15th, unless it falls on a weekend or holiday. For businesses, S corporations and partnerships need to file by March 15th, while C corporations are due by April 15th. If you're self-employed or a business owner, don't forget about quarterly estimated tax payments, which are due in April, June, September, and January. Setting reminders a month in advance can help you avoid last-minute scrambles. Next, get organized. Use accounting software like QuickBooks or Xero to track your income, expenses, and tax documents all year long. Keep everything in a dedicated folder, digital or physical, so you're not hunting for paperwork when it's time to file. If you're dealing with multiple states, consider working with a tax professional who understands New York's rules and can help you navigate multi-state filings. If you know you're going to need more time to prepare your return, file for an extension before the deadline. Individuals can submit Form IT-370 for a 6-month extension, and businesses can use Form CT-5. Just remember, you still need to pay at least 90% of your estimated tax liability by the original deadline to avoid penalties and interest. What if you can't pay your full tax bill by the deadline? Don't panic. File your return on time anyway. The penalty for failing to file is much higher than the penalty for failing to pay. New York offers payment plans that allow you to spread your payments out over several months or even years, depending on your situation. You can apply for a short-term plan if you can pay within 120 days, or a longer-term installment agreement if you need more time. But what if you've already missed a deadline? The most important thing is to act quickly. File your return as soon as possible, even if you can't pay in full. The longer you wait, the more penalties and interest will accumulate. If this is your first time filing late, you may be eligible for penalty abatement if you can show reasonable cause, like a medical emergency or natural disaster. Contact the New York State Department of Taxation and Finance to request relief and explain your situation. Ignoring late tax filings can lead to much bigger problems down the road. Penalties and interest can quickly double or triple your original tax bill. New York can place a lien on your assets, freeze your bank accounts, or even garnish your wages to collect unpaid taxes. If you're a business owner, failing to pay sales or payroll taxes can result in legal action and asset seizure. And repeated late filings increase your risk of being audited, which can mean even more scrutiny and stress. On the flip side, staying compliant with your tax filings offers real benefits. You avoid unnecessary fees and interest, maintain good standing with the New York Department of Taxation and Finance, and lower your risk of audits. You'll also be eligible for valuable tax credits and deductions that require timely filing, like small business tax credits, R&D credits, and energy efficiency incentives. The bottom line? Filing your taxes on time in New York isn't just about avoiding penalties. It's about protecting your finances and your peace of mind. By staying organized, tracking deadlines, using accounting software, and working with a trusted tax professional, you can stay ahead of your obligations and focus on what matters most: growing your business and securing your financial future. If you need help catching up on overdue taxes, setting up a payment plan, or planning for next tax season, don't hesitate to reach out to a qualified CPA who specializes in New York State tax services. With the right support, you can get back on track and avoid penalties for good. Stay proactive, stay organized, and stay compliant. Your future self will thank you.